hello everybody. Welcome to the Monday morning opening stream. Ooh, doesn't get much more exciting than this. We are at stock market peril, and I mean that seriously. Yeah, unfortunately, we are down near the lows again, or fortunately, depending on who you are in the market, and it looks pretty scary. And at the surface, I can make a lot of sense of this. You look at this and you think, damn, are we about to make new lows? Well, there are some signs that we'll go through today that do look pretty bad. But what I want you to each do right now is vote. If you're watching this live, vote now on the poll and tell me whether you're bullish or bearish for today so that I don't give you bias. I want to know what the community believes is going to happen, what you, the traders out there and investors, believe are going to happen with today's movements. So effectively, we are at the lows. You know that we're at previously demanded level. And if we scroll out to previous times and we look at these zones, we can see that there was a whole bunch of problems around this area previously. When the market came up and went bullish, got sold off, got bought up, and every time it came back into this area, it found buyers. So effectively, it was a previous demand zone. It's a current demand zone, and that's going to be something that's pretty important. Now, what happens in here? What happens next? Well, let's look at the evidence at hand. The first thing we've got is we've got a wick. What do wicks tell us? Wicks tell us that there is probably some form of buyer or demand that came through later on or at some point during the session. It closed at a higher point than the low itself. And this is going to be pretty important when we think about today. So we know that the buyers kind of came in and showed a little bit of commitment towards the close on Friday. They showed it to us at the right zone. We moved through the 3,700. We closed the gap that was here, and I would like to compare both side by side. So let's just quickly load two markets up. So we'll load over here the SPX. And then we'll go back to a daily. And what we want to be doing is understanding that we fully cleared this gap. So let's just go to the 2 hour so we can actually see where the gap was. And you can see there's the previous closure. There's the next open. So theoretically, the gap close was right here. Now that price just so happened to turn out to be around 36.74. Which is pretty much where we are right now. So we did clear the gap. That's all done. The whole island reversal that was there is finished. We collected a bunch of orders, you would think. And now today we play the game. And this is going to be a pretty serious one because if we move to the lows, the depth or the time that we spend, delete that. The depth or the time that we spend underneath these lows, and you can see I've got a little alert here just in case it happens, because I do want to know. It's very important. Will really dictate whether we go bang and then instantly find some rejections, or whether we move, of course, with a big closure point and really start pressuring down on these levels way below. 200 daily moving average, 200 weekly moving average sitting around here, around 35.25. Then underneath that, not much action potentially to 3,200. So there's some serious significant weakness that could come. Before we go any further into the SP 500, I want to just check by what you guys think here in the poll. And I guess we'll just close it here early. A lot of you have voted already. We'll have a decent amount of people coming through. So let's close that poll. And 324 votes, 53% bullish, 46% bearish. So you've got to say that's pretty much split down the middle almost between bulls and bears. Let's now look at all the evidence at hand. Firstly, VIX, volatility index 32.19. 32.19. That's a pretty large spike here on the VIX. It looks like if we make a new low, we could be going to 35 VIX. 35 VIX often associated with some pretty decent low kind of characterized zones in the past. Now, could this be the time that we finally get that really high VIX that we want? I truly do want a really high VIX, a capitulation, a maximum fear, technically a freak out when it comes to the markets. If that type of thing happens, often it can be associated with hitting extreme zones that then can be purchased off. And that can sometimes be the end of the crash. Now, a lot of people, of course, are calling this just the beginning of what's going to be a very long-winded horror show that could happen. And, anything's possible. Having interest rates this high, it's going to put a lot of pressure on these economies. So 32.16. So the VIX is spiking. The market's freaking out. Yields across the board, 4.265, though it has turned from where it was during the Asian session. We went up to 4.345. So we went a lot higher. Yields turning around a little bit here. The yield on the 10-year, again, up, but turning around a little bit at this stage. We want to see both of those start to drop off a little bit if we're bullish this market for the longer period. So that's not really shaping up that too well. What about commodities? Well, copper is at a little level of demand. So copper's finding a small amount of buyers after finding weakness here. Probably any kind of recovery that's coming is going to be met by sells. So we do need to remember that. That's going to be a big thing. Dollar index, incredibly strong during the Asian session, has weakened significantly since then. We saw the pound today. If anyone's not familiar, look at the Great British Pound. Look at this. Holy, not the BGP, whatever that is. The Great British Pound. Or should I call it weaker than the USD pound? Not quite yet, yeah. Oh, man, that was crazy. 103. 103 today. This thing almost went, for any of our British viewers, I'm sure there's a few out there, so people from London and all around the UK. And, oh, man, you would have been freaking out this morning and thinking, no, my money's worth nothing. What happened to the glory days, guys? What happened to the glory days? 1.08. Don't worry, it's the same here in Australia. Our currency is getting thrashed. We're all getting thrashed by the power of the Dixie. The US dollar is beating us down. So we saw an extreme capitulation here on the pound, and it's being met by big bullish movement. Check out this 1 hour chart. Boom. Look at that. Damn. That's a nasty candle. 4% down. That's a lot in the currency world. Fully rejected all of that now. So we've seen a big switcheroony from this huge horror show to a nice big rally against the dollar index coming through. And that's a fairly significant rejection here. Look at the pound in comparison to the history we have on this chart. I'll get another one. I just can't, I can't stress. You never really think of the pound coming down here. A lot of people don't look at currencies. Some of you guys do. Maybe these guys have a longer chart. Not really. That's actually terrible history. That was a bad guess. Maybe Oanda has lots of history. There we go. So you can see in comparison, look how bad it is. Oh, it's really shocking. And this is across a lot of European zone kind of currencies. They're all very weak. But yeah, did we just hit an extreme low and rally from it? That's going to be kind of important as well. Because if we're seeing a whole bunch of currencies around the world hitting extreme lows, then it could strengthen our case. There's the euro, just went down to 95, now at 96. Could strengthen that case for the US dollar to maybe turn around a little bit, the euro to strengthen a little bit as it's wiped so many buyers out and reverse. Let me just give you an idea here of how many retail traders are short currently on these pairs. So here's some readings. 23% of traders were short the euro, and only 19% were short the pound. Can you imagine how many long buys in both the euro and the pound got destroyed during today and Friday's session? That is brutal. And if you can believe this, the US dollar CAD only has 6% long traders on it. So everyone's trying to short the US dollar versus all these pairs. Well, it's not going to work out for them, but maybe we've hit the extreme. It's getting close. I'm not trading that to the long side. I'm just saying these are fairly extreme pullbacks, and that shows you sometimes this demand or turnaround. All right, let's go back to the US 500 because I know a lot of you guys are interested in this. So far, what have we got? We've got extremely crazy lows for the pound, for the euro. The dollar index has spiked and then rejected so far. Both yields have spiked and rejected so far, and only the VIX seems to be incredibly high. The pound looks like Bitcoin. Yeah, that's pretty true there. It does look pretty much like that. So the base, let's look at the base here. The low, the break. We seem to be having problems with 3,700. We have 1, 2, 3, and a minor pick through and rejection. It also seems like on the minor time frames, we've kind of found some demand around this 3660. So for this morning session, we do not want a new low. We really do not want a new low, because if we get a new low, what's that telling us? Maybe all of this is structure, and a new low will then have to be forced into a new high, which pushes past 3,700, which then we could look to buy later on. So you don't really want a new low here this morning, guys. If you do get one, it's going to take a little while to activate a high quality trade from it. A new low will just equal, either patience or movement down to the next zone. Either or. I'd like to see it hold within this box area here. Movement up, 3,700 plus breakout. Where's the next zone that's going to have problems with? It's most likely in here, and this is a minor zone, 3,760. If you watched my video on the weekend, this is the first area where I could see potential shorts that give you higher risk rewards to be placed somewhere in here. Market goes bullish. Ideally, it pushes into here. A form of supply, a bit of a problem for the market. Alpha Horn says Dow already made a new low. Yeah, well, we can go to the Dow, but let's talk about S&P 500. I'm less interested in the Dow than I am in the S&P 500. Unfortunately, the Dow doesn't mean as much. And you might argue with me and say, Tom, you idiot, it's the 30 biggest companies. Are you stupid? And I'd say to this, yeah, but the 500 companies or the Russell 2000 companies are less likely and less susceptible to one sector getting smashed. And that can be sometimes the problem. So if we get here, pull back into this zone or pull back into this structural base here, they're where the two biggest sell positions I see this week occur, in here or in here. Ideally, we make it to those levels. If you wish to sell, I think they are better zones. Personally, my own personal opinion, obviously nothing other than this. I just think that this is going to be the two big levels. Now, we also need to discuss Papa Powell because his annoyance is coming out again. Papa Powell speaking Tuesday. Fed Chair Powell speaks. Annoying. Then we scroll down and we have Fed Chair Powell speaking again on Wednesday. Just make sure this is actually set to the right time. 10:21 p.m. It's set to my time. 1 second, guys. Oh, no, Eastern time. Is that right? There we go. Bit better now. I was thinking, I don't remember him speaking at that time. So 7:38. Is that 7:30 a.m.? Is it true? Oh, anyway, supposedly there. And of course, we have ECB president. Make sure you set this to your own timing. This is technically correct because, yeah. Anyway, ECB President Lagarde speaks here for the euro, and that's happening very, very soon. So we'll find out whether that moves the currencies. We'll be live streaming. We'll see what this bro has to say. And then the Fed Chair Powell speaking and being annoying for the rest of the week. And there's all these little Mester and Bullard, and I don't even know. Why do they even get to talk? Shut them up. That's what we need to do. Shut them up. Get rid of them. They're super annoying. Marco P says, could see a good flip this week. Yep. Could. I mean, we're getting really close to these lows, but you've got to be aware of 3760, 38 kind of 60 zone. Matthew Beverly says, long-term investor here looking to start adding for 20-year horizon. Fair enough. If you've held off, well done to you for having that kind of foresight to hold to these levels at least. All the way through 2023, you want to be looking at it. Index versus individual stock picks. What do you think? It's a great question. 20-year horizon. Well, see, it's a pretty loaded question because there's so many ways you can apply it. And I'm not a tax expert or specialist, but Remember, when you're holding a position for a long time, you've got to always ask yourself, when you're looking at 20 years, how many companies survive a 20 to 30 year time frame? I mean, we've got some horrors that we can talk about. IBM's not doing too well anymore, is it? It was a bit of a powerhouse back in the day. GE, GM, all those types of stocks, plenty die over the years. So the main issue with really long-term investing, 20 years, 30-year horizons, is going to be that you don't know what's going to necessarily survive over what is a very big changing world. So because it's a very big changing world, that's going to be an issue. The other thing as well is what an S&P 500 index investment is its rotation. It rotates based on market cap and size. So really, it's kind of like its own little algorithm underneath doing work for you with the ever-changing times. So there's an argument for both. If you think you're buying quality companies and you have some kind of edge in those companies and you truly believe you're a good picker, picking is better. If you truly just want to time things instead and just average, maybe the index is better. But there's merit to both of them. Sometimes also picking sectors instead could be the purchase. Best companies last 30 years on top. Moats get smaller over time. There you go. That's right. Moats. Moat. When you're buying... Chart Junkie says, very well said, very long can be dangerous. Yeah, very long, like Buffett style can be very hard. In fact, I usually preface things between crashes. So you kind of go, like a good way of thinking about investments could be crash happens and you reassess, funnily enough, potentially your portfolio as it makes a new high. And you say, what changed during this crash? Are the companies that have now recovered, or before the crash, if you can somehow do that, what's changing? During the crash bottom, what should I buy? What's going to do well out of this crash? What's going to do well over the next decade? What type of market are we in? Are we in an inflationary market? Are we in a deflationary boom? All of these questions you can ask yourself. But yes, I think 20-year horizons are very tough. I'll just say it. I think they're very tough. I find it hard to even know what the hell the world looks like in 15 years. I didn't even know what's going to happen to the dollar index in 15 years. I mean, come on, guys. We didn't know there would be an inflationary boom an inflationary boom that became a stagflationary hellhole that we're in right now. Did you know that? Not everybody knew that. We might have known inflation was getting big, but we probably didn't think China was going to continue the lockdown stance either, and then we'd get into all this trouble. And people just saying dollar to the moon. Whatever happened to cash was trash. So interesting. We'll cover Tesla. We'll cover a whole bunch of stuff. So we cover this market and we talk about it. We know we hit key demand. We know we've got potential levels and structural formations that could hold shorts in the future. And I would like to see bounces into those zones. I believe that many people got smoked last week, unfortunately. And you can see here the market's buying into this open. So it's up quite significantly. It's up about 0.6% since we started, I think, or 0.4. So it's moving pretty quick. Let's have a look through other couple of markets. Let's go over here to the Dow. Someone mentioned the Dow before. Let's take a look at the Dow. So yes, the Dow made a new low. And a lot of people look at the Dow and they say, Tom, the Dow, why don't you cover the Dow? Frankly, I think it's old and I think it's outdated from the perspective of doing quality analysis that covers the US economy and is more technical and less screwy. The problem with the Dow is it often does get very similar entries. So why would I use the Dow when I could just use the S&P 500, which gives me the better entries, the cleaner levels, and the more accurate zones? That's always my main problem. If I was to pick two, funnily enough, I'd use the S&P 500 and I'd use the Russell. The Russell 2000 is also a highly underrated market. Looks very similar, but you can see again, we're hitting into that key level. Fantastic. Very, very nice. Fancy says, actually, why don't you guys vote on this? We need to vote, finally put the Dow to rest. Or maybe you're going to say it's the best just to tilt me off. Okay, which index is best? And you don't get to vote for anything except for American index. We're going to go US 500. We're going to go Dow. We'll go the US 2K. I like the US 2K. The US 2K is cool. And then, yes, we'll put in the US 100, or of course the NAS. So let's see what you guys say. I'm interested. I can already see what you're all going to vote. And then I'm going to go on a tilt fest. So, all right, let's move over to a few other markets. Let's discuss the biggest issue with rallies that we see here in the future. And we can use the DAX to figure this out. Because the DAX already made a new... Now, the DAX is also only a few companies, but I like to think of it as like a proxy Europe. Kind of like you're looking at Europe and you're like, oh, that looks disgusting. Or, oh, that looks kind of interesting. Most of the time you're like, oh, that looks disgusting. I should invest in America instead. But sometimes the DAX gives us beauty and the DAX gives us great opportunities and foresight. Remember, this was a giant wyckoff. Here you have your BC, here you have your UT, here you have your UTAD, and it got decimated. And then it bounced back up to the zone, and then it got decimated again. So the DAX is through the sup. The DAX is through the demand level that you've got here. It's closed below. Rallies should, you would think, feasibly be met by sell. And here's the issue. Where's the next level? Is it 11,500, the pandemic lows? Well, let's look at a couple of stocks here. Let's look at a couple of stocks here. And it's a good question. Oh, there's a question coming in. I'll answer it in a second just about the US 100. So we'll go through AMD. I want to bring AMD up. Hey, what's this doing? What the hell? AMD is through the sup. Again, it's already swung at once. Bang, 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 bang. Boom. Hits it again. Boom. I mean, that doesn't look good. The gaps here, the demand or the structure is down here. So even if this thing rallies, I mean, that seems more likely, doesn't it? And I've warned against AMD for a little while. Look, I get it. I got the AMD in my computer right now. I love the AMD. The AMD. But the problem is that it has a history of going to the moon and then all coming back down to Earth. And this is kind of like a giant, horrible Head and Shoulders as well. A few people have messaged me about that. What do you think about that, Tom? They say. I'm like, well, if you think it's going to zero, sure. I don't think it's going to zero. But yeah, there's some gaps here. There's structure here. This is Exhibit A. Let's go to Exhibit B. And I'm sure you guys can throw a billion stocks at me like this. New low, Google. Yes, it filled that gap to wick. Next structure, 87. Rallies, you would think, are met by sell. There's a problem here. There's an issue across all of them. I see it everywhere. Microsoft, a kahuna, a king kahuna, my favorite stock in the whole market. The moat is large. If something competes with Microsoft, they gobble it up. I call this pure capitalism. There's pure capitalism on the chart. It's a sneaky company that gets sued and then seems to get away with it. Oh, we're not a monopoly. Don't worry about us. Now they're in cybercrime, so they can't even be touched. The government can't even touch Microsoft. Oh, guys, we think you're a monopoly. They're like, do you want our security or do you not? So here we have the take of the low. I've talked about this trend line for a bazillion years. And again, it's another stock through the low. There's only really a few that haven't done it. Apple, look at this. Rejection again. The lows here, 148, whatever the hell it is. We close underneath here in the future. Well, you've problems. Could one of the mods get rid of that? I'll get rid of them 1 second. There we go. That should get rid of those pricks. Oh, I hate those. I hate them. YouTube's got too many spammers on it, guys. I'm sorry about that in the comment section. So we've got another stock. We're just building a case here. We've got a stock here that's going up. Now, the Tesla peeps. the Tesla peeps. See, you are holding very well as well. We came off that topping. Yep, it's been pretty brutal, but we're now in this little strange demand zone ahead of the market open. If we bust below, it's another stock that, if you think of this as a double top pattern, could go low, 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 all the way back down here, at least to the gap. So these two prices are somewhere around 250 and down to 217. There's problem. And that could be a horror show. I mean, for a lot of people, they're going to be like, 20% down. That's pretty bad. So again, pickups could be met by sell demand. Somebody mentioned gap and crap before, which was a comment. We've also got Dom doing a massive super chat. Let me just quickly get your super chat here. Dom, thank you very much for the $20 of support. I appreciate that, man. Is that American dollars? That's like $1 million Australian dollars. Thank you very much, sir. I might keep it in American dollars since it's the best currency in the world. So that would be nice. I can finally afford a steak. Thanks for streaming tonight. No worries, man. I think we could see a gap and crap today. Absolutely. There's a lot of Fed speak on the calendar to give headlines, and Apple, Tesla have been holding us up. I should have read this chat before I went and did these. But anyway, yes, you're correct. Both had bad headlines this morning. Let me guess, Tesla's one. 1.8 million cars recalled in the small writing, but it can be fixed with a software update. Thanks very much, Dom. Appreciate that. I don't know what's in the headlines there. I don't tend to read the news. Tesla fire in Germany. Oh, in the German factory. Well, that's not ideal. It's only down 0.84%. Look, it's just news. It's all right. They look, the fire will be put out, guys. It's all going to be good. Thank you very much, Dom, again. I appreciate that. Pradeep C19, Singapore, $10. Hello. Singapore dollars, SGD and Singapore dollars in case. Yeah, I'll take Singapore dollars, much better than odd dollars. I'll have them as well. I'll come over and I'll spend them in the Marina Bay Sands on top of the giant boat. Thank you very much. I do love Singapore. It's a great place. Guys, visit Singapore. It's pretty cool. Make sure you go to the zoo. The zoo is really cool. Zoo is awesome. I enjoy the zoo in Singapore. All right. So what have we built here? We've built a case. If Tesla and Apple go underneath, bad problems. We've got Google. We've got Microsoft. We've got AMD. We've got NVIDIA. We've got semiconductors. Let me just show you here. I thought this would happen. Anyone in our private community would know this. Semiconductors spiked the low on the Friday session and then just rallied up a little bit. So they could rally as well. But what if we make a new low and we actually get under that spiked low? That's now tested this area, this demand zone. It's done the little sneaky thing. So if it makes a new low again, bad things. Bad. Semiconductors don't have much to go on until like 174. So that's another drop that's significant. And this is where all that capitulation crap comes in. 8%, 13%, it's pretty nasty. Thank you very much again, Pradeep, for the super chat. Appreciate it. Do love some Singapore dollars. So the gap and crap idea that someone mentioned before, 37.60. Here it is, 37.60. Okay. Well, I said 37.60 before anyway, but that wasn't about gaps. That's not just about gaps. We also tap into this previous little wiki zone. There's a whole bunch of weird stuff going on there in terms of structure. So if we do rally, we gap, which is the idea. And then, of course, do we fall there? These are the two, 38.60-ish and 37.60-ish are the two big fall-off zones. Paul says, Market Watch is blaming the Italian elections for futures being down this morning. Yeah, I don't read the news. Look, the news is pointless, guys. Ask yourself this question again. How much news? That doesn't mean stop watching the show. Watch the show, give it likes every day. Every day, please. You gotta like that. Like just like a remote thing. set the alert, bang, like the video, leave it on. There we go. That's as simple as that. It's as simple as that. But other than my news channel, we don't listen to the news. What we instead do is we focus on the charts, the price action, sometimes the macro data that can help us, all of these types of things. Always ask yourself this question. Would knowing the news be better or worse in your trading and investment journey? And there are very few bits of data that really matter. Right now, of course, inflation number freaks the market out, but really it was going to do its little dance anyway. Because remember, the market prepares. Market's like, what, you don't think it just comes into this magical zone up here that we definitely didn't like, and then it goes bang? Of course it wants to be there because it goes to a critical zone before the big bit of news comes out, and then that will be used as the excuse. But it's probably going to go in the direction anyway. Holy moly. Alejandro. Is that a kayak? Very cool. Is it Alejandro Pino? $50. 2 million Australian dollars. Thank you very much, sir. Thanks for what you do. No, thank you. It's a very nice dog you've got there. And I think you're a kayak fishing person, or at least kayak person. I like that very much. Is that like a Hobie or something? Very cool. Paul says $50 equals 7.6 million odd. Thank you very much, Paul. Appreciate that. Hey, when I come to America next year, I'll buy some. I'll put it back into the American economy. Don't worry. I'll buy all the great American gifts and snacks and things. It'll be glorious. I do enjoy. I'll let you guys know when I'm coming over there. We'll do some kind of catch-up thing, hopefully, with the community. It'd be awesome. So, the gap, the S&P 500, all of this stuff. Someone said that's a lot of Chick-fil-A. Yes, it is. This kind of points towards that potential here for that rally initially. Let's have a look at some other markets. I want to show gold. And you might say, well, Tom, I hate gold. Okay, cool. That's fine. You can hate gold. I like gold sometimes. And look, I reserve the right to change my opinion. I mean, obviously, I went bullish here on gold. I went bearish here on gold. You guys will know because I was like crapping on it. And in here, I wanted to see rallies. And we just didn't see it. And that's frustrating, okay? But I know why. Gold hates yield. And what happens was yield went mental. Yield went up and up and up and up. Well, that's not going to work. So unfortunately, we couldn't get our long-term Goldie positions in. But it will be time of gold eventually, and I'm not going to stop covering it. I may hate oil so much right now that I want oil down to 75 and then $65 a barrel. And that's where I believe it'll get eventually. But let's talk about gold here, because I think that rally from gold could be met by sell demand as well. And that's going to move into this gap and crap kind of concept. If the market comes back into this structural zone, it's probably going to have a problem. And if we go to like a 10-minute chart here or 15 or whatever, you'll notice that you've got this structure. And what happens is a lot of closures off this area. The market comes back up, and somewhere in this structure, specifically probably around here is my guess. I may have a little alert set there, but whatever. That kind of area is a point of interest for me. So if the market does go, woo, maybe it goes bleh there. But I'm also open, as you can see here, and this is why I'm open to both. It's what all good traders do. I'm open to the idea that it comes above. And if that happens, if I don't see the reaction I want in here, then I see it keep going. Then if it gets above here, well, whoa, I'm changing my tune. I might be starting to get a bit bullish here on gold. I'm open to both ideas. I'll change the tune like this if necessary. It's like Druckenmiller says, Stanley Druckenmiller, the best investor trader dude you've never heard of. He's not a dude, I guess. He's a beast. If I ever meet that guy, I'll be so happy. In his like droning voice, he'll talk to me and he'll tell me all of the magical things he's done with his billions of dollars. So yeah, Stanley Druckenmiller, the Druck Master, he's really, really beast mode. And he's, my opinion, the best American investor trader dude ever. Terrence says, I can't believe Twitter is still at $41.50. And High Def Tasmanian says, gold has lost its shine since China and Russia have been stockpiling. The new world reserve is petrodollar. Ric Flair says Druckenmiller is bearish right now. I don't listen too much to the Druck Master on the television. But yes, he's bearish. He wants this market. Look, he basically said the risk reward, I believe in June and July, was still bearish, but he thought that there was too much bearishness and it would go up. He was correct, and I totally agree with him. And he's obviously bearish on the entire market. We've already painted a case that says that most stocks have gone bearish. Any of these bullish moves here could easily be met by swift decline. Swift. Nicole says, does gold become more attractive as global currencies fail? If they fail. So we'll close the poll. It looks like US 500 absolutely smashed everything else out of the water. US 500, 77%. US 100, 14%. And the Dow, it only got 4%. No, the Dow, it's dead. It's dead, guys. 4%. And the US 2K coming in with a poor 4% as well. So a few people ask what's the difference between the US 500 and 100. 100 obviously is the Nasdaq tech companies. So therefore it's more of a growth sector, 100 companies, and 500 companies, more of a broad base of the market, of the US market there. So yeah, but the idea about gold is, look, gold is not really, it's a currency. So you've got to just think of it as it's more about what would people rather own, and it's more about gold is also a pain in the ass to store. It's not like US dollars where I put it into a bank account and I make money on it. Why does everyone want US dollars? The Fed just keeps raising rates. It's obvious why they'd want it. They'd love that stuff. That's exactly what they want. Exactly. So yeah, it's a big thing. Whoa. Pradot Singh, $51. Thank you very much. Wow. I look forward to the insights in your daily market updates every evening. I appreciate that, sir. Thank you very much. Chick-fil-A for all, guys. Appreciate it. Thank you very much, Pradot. Appreciate that. Man, today is a good day, guys. It's a lot of Chick-fil-A, which I probably shouldn't be eating. So anyway, let's move over to Dr. Copper. The comment that came after that I first read was Dr. Copper looks sick. Yep, Dr. Copper looks absolutely gross. And yeah, it's realistically right back down. Again, it's kind of in that little area where you could see buyers coming back in though, so I can see why they're buying. But overall, it's really down and out. And of course, it is weakening heavily. So you've got to be careful here. Buys probably be met by sell again. We haven't necessarily structured up on copper. Look at copper in the great scheme of things. It's already taken off everything it put on in 2020, everything it put on in 21, and it's back already to 18. They sometimes say that copper markets predict a lot of things in the world. Always remember this. Metals markets trade in future contracts. So who probably knows the future better than anyone else? Often it's the copper players. Michael Anderson, thank you very much for joining the Stonk Squad and supporting the community. I appreciate that very much. David Taylor says at FX Evolution, what is the record for largest super chat? I think $100 US, maybe $150 US for a very nice gentleman a while ago when we used to almost like do crazy streams every single day of the week. But Pradot there and a few others tonight, very, very Alejandro and everyone else, very generous donations. Appreciate that. So Tesla on the demand. US 500 for anyone that's coming down. Technically on the demand, it kind of needs to hold here. Scroll structure, we're about a little over 15 minutes till the market opens. So we'll look at a whole bunch of things. This is the miniature demand at the moment. That's obviously the extreme low. And this is the problematic zone. So we've got problematic zone at 3,700 plus. So we'd like to see it bounce through 3,700 And if you're feeling bearish, maybe you look at structure around 3760. Ideally, gold would be moving up into those zones, etc., etc. Few people want a Bitcoin analysis. So Bitcoin holding incredibly well. I still think Bitcoin gets smoked, by the way, based on what we're seeing on stocks with AMD, with Nvidia, with semiconductors, with Google, with Microsoft, with all these stocks coming through, and based on the idea that there's a good chance we make a new low very soon. There's a good chance that we may take out old 17,500 Bitcoin. I want the chat now, even if you don't even care about crypto, tell me where you think Bitcoin goes underneath 17,500. Because right now, yes, we're forming base, we're trying our best, but we've got problematic supply issues everywhere here on Bitcoin. 19,800, 20,000, all sorts of issues in here. We could see big sell-offs in any of these zones. We'd need to clear this area to even feel slightly confident. Let's see what people think in the room here. 9K bottom from Keki. Thank you very much, Keki. Sergez says 11 to 14K. That's too wide. I want tight. Eli, 10 to 12. Okay, that's all right. 15K, 9K, 3K, 16K. Man, you guys got all sorts of levels. Hassan says, Tom, why would BTC will drop in 150 days? Why in February 23? So no. Okay. So 150 days is my expectation that the low will form over this period. It doesn't have to hit the low in 150 days. I want to see a low formed over this period. That is, I don't believe this is necessarily the low. To me, it seems very likely that Bitcoin wants action lower. I think they want Sailor's head and they're like, yes, the trophy of Bitcoin, we'll keep this one. And they lift it up. Because remember, the nasty, evil manipulators are in the game now. They've got all their futures contracts in. They're ready to play the game. So if the stock market goes lower, you just got to think Bitcoin's going to get absolutely mauled with it. And if that does happen, there's not much holding it up. So your arguments are pretty much going to be around 16, which a few people said. And I believe nasty stuff, probably 12 to 9, somewhere in this structure here. Now, 150 days, I'll explain it. So in every previous cycle, which I know a lot of you will probably disagree with, but if you look at previous halving cycles, we tend to see the base form in the next 150 days. Every other one, 2012, 2016, and 2020. These cycles so far, we'll see question mark on this one. But after we go into the crypto winter in both of these cases, we've seen the lows form in this period. So the lowest points were always formed around this period. So what we want to do is if it does form lows here, let's say you're a crazy investor and you're like, yeah, I want cheap Bitcoin, I believe. Because when it gets low, it's going to be scary. You got to have plans and be ready to rock. So if this does happen, the base, if we look at the history of the halving, of history of everything else, of wiping out, of capitulation, you generally will expect it. And the other thing with markets is they tend not to do this. This is not symptomatic of a market that's finished the bottoming process. When markets bottom off, they tend to rip a new one. So as in like they tend to go bang, like straight back up, at least initially. Sometimes they'll go like this, which is what happened last time. But a lot of the time, they will just go boom, and then you'll get a big move, and then you'll just see it just chilling for a while. This time around, we've actually tapped it twice already, and that didn't happen here. We got an extreme low. We went extreme low, rally, cover, and then move. I want capitulation, guys. I want a horror show. Technically, that's what should happen. Will it? We'll find out. So for anyone joining us the last 13 minutes, whoa, we're getting a lot of people in here. Thank you very much to the 1,700 and almost 80 people. Give it a like if you're enjoying the stream, if you'd like the content. Hopefully the pacing's been good for you today, and we're talking about a whole bunch of stuff that is interesting to you. But look, all these markets are interconnected. Bitcoin, Ethereum. By the way, Ethereum's disconnection from mining has been a disaster for graphics cards. So many graphics companies getting wrecked. You can see it's come down to that previous little level. So that 1300-ish zone. I could still see Ethereum get absolutely smashed, unfortunately. But again, I still believe in the kahuna. And if this is all part of a giant distribution, then if we do find a new low this week on the stock market, watch out down below, guys. It's going to be kind of scary on the crypto markets. It'll get thin underneath here. And I mean thin from orders. And you know what happens when thinness happens on orders? They get smashed. So it's going to be pretty hard. John Galt, thank you very much. $25. Appreciate it, John. When does Twitter fall? I haven't looked at Twitter in a while. Check out Twitter and get back into the stocks. Is Elon still holding this thing? I don't even know what's going on there. He's getting sued or something. I don't even know. So Twitter 4150. That's a very strong read for Twitter. You would think it's lower by now. So you would think that Twitter should be probably more in these levels, similar to a Snap or anything else. If people aren't familiar, load up a Snap. You can see how badly Snap's doing. 10 buckaroonies. 10 buckaroonies. That's very low. Let's go to the daily here on this to put it in perspective. Ooh. Oh, God, it's bad. Nasty. Snap is TikTok smoked. I actually don't believe in this platform at all. I never did, but I think it's just, it could be gone. What do you guys think in the chat thing? Do you reckon this could be gone? Thomas D, Canadian $1.49 super sticker. Thank you very much. So we've got Twitter down heavily. You've got Meta, obviously, almost on 2020 lows. Might be a stock that you might want to look at this week as well. 2020 lows could be met by a little bit of buy demand. If you tap underneath those, so 137.43, very close for Meta to hit those lows. So yeah, Twitter is being held. Now I'm not too sure what's Dash doing. Or Dash 52. Well, I always say the same thing. Don't buy American IPOs, guys. Do not buy American IPOs for a while after. No. This is what we do to American IPOs when they first come out, and then we come back later to figure out if they're any good. Hood, horror show. Look at it. Whoa, it's bad, guys. Coin, absolute horror. They're all bad. They always are bad. The tech IPOs are really bad. And you just have to stay away from them. They come in with all this hype train, and then they just get smoked, and then they come back reborn from the ashes later on. So the question was Twitter. What have we got chart-wise? Of course, we can just mark up our standards resistance supports. We've tapped this low. We didn't make a new one. Found some demand. I think this is probably a bit of manipulation in here. I'm not really seeing anything in particular that tells me much about this chart. I wish I could say, well, I've got a strong opinion on it. Weekly, not really. I mean, obviously set alert down here. You could be going 2020 lows for sure, and not stopping, you would think, to 26.55. But there's just two little dojis here. No real decision. So I don't really think there's much going on here on Twitter, unfortunately. Finken says that's the TA I'm here for. Is that where Rivian horror show? SoFi, please, sir. SoFi. Jamik. Oh, thank you very much for the $20 super chat. Jamik, 19.99. So yeah, with the Twitter question, maybe look for a doji breakout here. Effectively, it's at its own happy place, equilibrium at the moment. You would want to see probably underneath there, and then the short would be down to 32. So you would need it underneath, ideally, the 38.12. And I would guess, based on the rest of the market, there's a good chance that this will stay range and then break to the low. But the market will come with it. And if it gets underneath there, then it will get smashed. Jamik, is it too late to buy AMD puts? Probably, yes. So, well, it's not too late. You just have to probably now wait for the rally and then have commitment towards that short concept. So if you were looking at AMD, you would scroll small time frames. I'd use the S&P 500 to really define it. But you can easily see where that previous structure was. If the market comes back into that structure, which is a few dollars away, I mean, that's 70, that'd be a little rally, probably pushing the SPY. When did that happen? 22nd, 23rd. This is at 10% up. So I could see it get into here. Probably need a 38.60 for the SPY. So you'd need the second hit to get a good level here for it. Buying puts, the key is not really usually to buy the put at the money. The key is instead to buy the puts at the price you believe technically the market should be at, but you've got to give it the correct level of time. So to answer the question, would I sell it? Would I buy a put here? Personally, no. I think it's too late. The better buy would have been as it broke past that structure that you saw on the smaller chart, or using the S&P 500 to do it. The better one now would be to wait till it gets up here, and of course, follow your own risk management, do your own thing there. Absolutely. Chart Junkie says that would love to see the short form social media gone. Yeah, that would be interesting. We've got Bradley B, member for 15 months, day trader tier. Thank you very much, Brad. Appreciate it as always, sir. Hope you're going well. Talked to you earlier today. HKD, best IPO ever. Yeah, that's true. Finken79 says AMD is fine unless we convert the entire economy to barter. Oh yeah, AMD is fine. Look, we're not talking about the end of the earth for AMD. We're just talking about that it's in the middle of nowhere land. So we're 6 minutes away from the market to open. I'll recap the US 500 ideas because a lot of you guys are here for that kind of concept, and then we'll get through this market. Thank you also to the 1,870 people that are joining us today. Remember to smash that like button, subscribe if you enjoy the content. Thank you for the support as well today. We really appreciate you. It's awesome. Boss says, we mooning now. Too many good news. And P09 Tech Guru Guy. Very cool. Tech Guru Guy. If we were going to go down more, wouldn't it make sense if we saw a few days of the week upside? Yes, pretty much. Then bears come back in for a bigger rug pull. That's correct. That would be generally the general gist that you would look for. So again, recap. Let's do some recap. Technically, a demand level gap was filled, which was around 36.70-ish, 36 whatever, on the low time frames on the SPX. You can go check it out. This is a demand zone. It had a reaction to it on Friday, which is the important concept that we're trying to bring through today. We've obviously got the potential of it going down. If it does dump under a new low, your usual target will be somewhere around the 200 SMA. So if you want to have a look at that, you can look at weekly 200. That's only just a slightly lower low, around 35.84 would be the 200. Often price does spike this zone throughout history during pullbacks. It can go through it, but for, of course, longer term investors, they very much love that zone. It's traditionally been quite solid at picking, not necessarily the absolute lows, but you can see the interaction over time with this level. So we have the interaction over here. It kind of weakened off that zone. It bought off that zone initially during 08. It weakened off that zone. It bought off that zone. 200 is well respected moving average. That's a simple moving average. Let's move back over to the US 100. So we've got on structure on the smaller time frames. You can see there's a bit of demand that's coming through 36.60. See the little doji here in the 2 weeks. You'd ideally like to clean 3,700, maybe 3,703 plus. And then hopefully at that point, you're going towards 3,760. Whoops, 3,760. So if we go towards 3,760, that's where the first bear sellers could come in. And it's 3,760, 3,860 in terms of very key levels. We do not want necessarily a low if a low forms, you're looking for a low followed by an instant kind of pickup. And if it isn't met and it just keeps selling off and you're not on that train, don't worry, guys. Have the patience. You will get another opportunity in the future. There's always another one. There's always another one. Andrew Key says, I wish we could email Tom a fresh Chick-fil-A. Thank you very much, Andrew. Appreciate it. And John Galt, $5. Big thanks on the Twitter look. No worries, sir. Thank you very much for the donation. Appreciate that. Thank you, John. So I'd like to see a 37.03 plus break today. That will hopefully solidify bulls towards the 37.60. Demand seems to be around 36.60 miniature timeframes. And of course, we've got the low over here and the super low over here. We've got structure forming, and it's a very tough one because we know we're at demand. We know there's a real case for a bull case here. But how do we get to that bull case? Usually the way I'd like to see it is a low taken. That's the structure formation. The market then goes bullish, then goes a bit of a pullback. And at that point, I'll be like, okay, I'm going to buy. And that's a very high probability style setup. Much, much higher probability than the little ones we're looking at here. But, takes incredible patience, and it means you have to look at a lot of markets to get that kind of stuff. 2 minutes off the open. Let's take a look here at some of the pre-markets. Let's go over to the US. We will just remember as well, if you're very interested in these kind of heat maps, you can get those. Let's have a look at popular. We'll go to pre-market price, pre-market percentage change. We've got Lending Club getting smashed, Herbalife, Etsy, Tesla down 1.3% now. Kellogg, Western Digital, Uber, Citigroup, all of these other ones, Snowflake, bit of tech, bit of defensive. Microsoft also down 0.59. On the positive side of some of the most popular ones, we've got Qualcomm, so semiconductors maybe going okay here today. Intel, Zoom, Chewy, not up much. There's not that much green. There's a bit more red in the populars. If we go over to the SP500 and then we go pre-market change, you can see some big reds there in these stocks. So 1 minute now till the market opens. Let's see how we go, guys. Most of you voted. The votes were in 53% bullish, 47% it was towards the bearish side. That's basically as close as you get to 50-50. So as we lead into this market, we've got very differing opinions, people fighting it out. No one's really too sure. The case can be made probably towards the bulls, I guess, at this zone, but I think it'll be short-lived if it is there. To short here is incredibly tough. Maybe you have absolute steal. I personally don't. I'd rather be neutral than anything at this zone. But if I was to have to pick, I'd probably go the small bull case. But I'm a little bit optimistic, Paul says it only matters where we close today. Pretty true, Paul. Pretty true. If you do feel like a nasty bear, you're really hoping for a bit of a pullback, actually, so you can get some nasty action in. TLT is going bankrupt, buddy, says Debbie Downer. Tesla stocks are falling. Debbie Downer? What's with the name? I'm sorry, guys. We opened just then, by the way. Ding, ding, ding. Here we go. So Boss says, I am super bullish. Tesla stocks are falling. Well, the news out of the factories, supposedly Berlin is burning. Supposedly. US 100 opens 11,318. Actually gets a flat reading there from the day, which is not too bad. So we've got the kind of equal low. Do remember SPX, guys. The reason why we think there could be a little bounce is not only did we find small demand buying on Friday, but we've also got that closure of the gap sitting around 37.50, 37.57. So that's a potential gap. And as they say, crap. 37.60 is a also key little structural point. So hopefully we do see some bullishness. And we get that coming through. I'd like to see a 3,700 plus close. T. Bowen says massive put walls. Yeah, let's have a quick look at that while we've got the market open. You can go over to Maximum Pain or look at a whole bunch of other websites. No, I'm not endorsed by this website, if anyone asks. But here is the Monday expirations. So we've got a bunch of 360 puts, obviously a lot less than normal because it's only a Monday expiration. Got a bunch of 370 calls, 365 puts seem to be there. That would kind of, push us to holding this zone ideally, just to not pay those out. And I don't know who this is, but they're going to lose their money. Too bad, so sad for that one over there. Max Payne at 372 for today. 28th, we've got 357 puts. So actually quite far under the current market price. Then on the 30th, we have 350, 360, and 390 puts. So that 390 strike is really picking up now. 2.356 mil. So a decent amount of options. It's not as big as the 2 weeks ago one, but it certainly is getting up there. So a significant amount of options here on the Friday expiration. And the big strikes, obviously Max Payne at 392. And you can see that decent amount of puts sitting around the 390 as well. Does that bode well for bullishness throughout the week as well? Well, I think it can. Let's take a look at the options for the next week. Just want to look at the third here. So 360, very small amount, absolutely nothing going on there. Fifth, oh, that's very thin so far. And then the 7th, again, very thin. So when you're looking at options amounts, this week, if you were just looking at it purely, remember we said 2 weeks ago, that week was going to be hard for the options to really get destroyed. But the week after that, we were going to go into a massive dump off. Well, that is what technically happened. We got that massive extra dump off because there were no options until the Friday, and there wasn't even that much there. So this week, we have a lot more options in the market than the week after. Makes sense. We're closer to this week. But yeah, it kind of points towards that idea of rally into potential dump later on. Greening up a bit. Microsoft going green, says Paul. Yeah, so we can look through the stocks here. You can see green across the board. Thank you to the 1,800 people watching us as well. Appreciate you guys. Mostly green, some notables here. 4% up on things like Twilio. Actually, what is Twilio trading at? I haven't looked at Twilio in ages. $71. 2020 lows. Oh, I forgot how high it was. It's like an iceberg, except it's a reverse iceberg. You know how like the iceberg only shows the good bit, or the small bit above the water, and it's all underwater. That's the reverse iceberg, guys. Should invert that chart. Yeah, that is absolutely highly nasty. So Hyperstock's doing okay today. Palantir doing okay. Market itself going green, kind of in the Hyperstock side, which usually you can tell because of the Russell. Let's have a quick look here. We'll go over to the US and then we'll go over to sectors. We'll go top 50 market, percentage change. So far, the money seems to be in internet, direct marketing material, application software, kind of that area, the healthcare, the defensive, the oil, those kind of ones, not seeing great gains. Hotels, resorts, interestingly, probably the best sector of the day so far. So, yeah, what's in application software? What are these stocks? Okay. Oh, look at all these things up. Palantir's there. Infobed, DocuSign. So that seems to be where the money flow is, at least early. Kevin says, I think somebody's starched Tom's underwear and he's extra bearish this morning. Nah, man, I'm a lover on the markets. We got to be optimistic. But as I said, today I'm bullish. If I had to pick, tomorrow, the next day, well, from the options chain, we could push these 3760s, 3860s. We saw what we saw before, but I am overall looking for a new low. If you want the stats, though, they would point towards, technically, we've never invalidated one concept. Remember, we never invalidated the idea that if you make from here to here, if you got a 50% plus fib pullback of the whole move, you never made a new S&P 500 low in history. So are we about to see history being made? Well, we'll find out, but certainly there. Bullish on Tesla before Friday? I don't know. I'm just bullish here till we hit these levels, and then we'll see what happens at the levels. But yeah, I reserve the right to make all sorts of changes this week based on these 3760s, 3860s, those kind of areas. Today, I like the wick. And so far, so good on the market. All right, guys. Well, thank you so much for watching along. If you did enjoy the stream, remember to subscribe, smash the like button. We do these every Monday for the market opens. As always, I appreciate the community so much for following along, watching the videos, smashing the like, sharing the ideas, and whatever else. If you are interested in finding out more about day trading, scalping, all of that kind of stuff, I did just release the new course that I'm drip feeding and personally teaching myself. Over at fxevolution.com. If you're interested in joining us, you can do so. Feedback so far, very, very good. If anyone in here has been doing it, hopefully you can follow that feedback for everyone. But we've just completed week 1. Obviously, you can come in, watch the videos. And yeah, it's a culmination of a lot of my work. And I know it's a very solid thing. So if you're interested, check it out. Otherwise, thanks so much for the support. And appreciate the donations today as well. Definitely got to make it over to America in 2023. And if anyone's interested in the Australian, we're doing a little conference up in the Gold Coast. Want to come off for the weekend and join us and get some good. We've got some great speakers from all over Australia. Some really top-notch guys. In America, we've got some top-notch guys lined up as well. If we do come over there for a conference as well, you can check it out, fxevolution.com. Thanks so much, guys. Have a great day. Smash it out there. But remember, always have the patience to react to markets, guys. If you see the right types of setups, the market will come to you. Think about it this way. When have you ever made good knee-jerk reaction decisions? Generally, the best plans are the ones that you set up over the weekend, over the market structure, and then you react to them. Set alerts. Don't sit in front of the charts. There's no point. Catch up. Bye.